Good morning, ladies and gentlemen. Welcome to another beautiful day in Austin, Texas. This is our 2021 housing update. We're going to talk buying real estate investments. I know a lot of you guys are kind of struggling right now to find investments in Austin, but everybody knows that the economy in Austin for the next year or so is going to just do well. So it's going to be kind of hard to mess up. My name, Matt Leshford, once again with you with 1836 Property Management here in beautiful Austin, Texas. And we are your property management resource in town. We're your property management resource in Austin, Texas, 1836 Property Management. We have one of our favorite agents with you today from Austin. So I'm going to get into that in just a second. We have a question and answer section as well. One is at the bottom of the screen. So if you have a question, you're welcome to pose that to us at any time, and we'll get those at the end. And we also have some polls we're going to pull out for you during our crowdcast today. So without further ado, Barrett Raven. Barrett is a partner of ours, local realtor. He is with Realty Austin. If I may blow a horn for him so he doesn't have to, he's kind of killing it over there. How long have you been with him right now?
Man, I believe I just celebrated my 5-year anniversary at Realty Austin.
Unbelievable. I mean, it's like time. The last year just kind of took time off the map, and then we're trying to catch up to figure out where we are. But he's been doing really well over there. They love him. I think he's extremely happy with them. And it's so great to see that synergy deliver productive results for clients and then happy agents. Because if you burn the agent out, well, then they're going to be gone anyway. And we all know how that works. So Barrett, what did I miss about you? Obviously, we're going to get your contact info, but what else has been going on in your world?
Yeah, I mean, one thing you did not mention is that I am an actual client. I mean, I'm a client of 1836, so I'm an investor as well. Yes, I'm an agent, but I'm also a client of your guys. That's also pretty important to me.
It's important to us as well. I didn't want to see we work with each other like that. That's how it works. But beyond that, we don't do business with people anymore that are that we don't philosophically align with. It wears us all down, and it takes away our capability of delivering smiles and great service and being emotionally available to the clients that are wonderful and that we are aligned with. And we're not real hard to get along with, but some people live in this it's everyone else's fault mentality, and some people say, how can we do more together, and let's listen and talk and share. And Barrett's just been remarkable to work with on our end, so it was an easy ask for us. Hopefully it was an easy yes for him and his schedule to join us today. So a short explanation of the topic we're going to cover and bullet points in that today is really about buying real estate in Austin, because Barrett is helping people, and you're welcome to reach out to him to buy those investment properties in Austin, Texas. And so we're going to cover buyer competition and inventory, because it's a mess out there right now, in all fairness. If there's a continuum, you're at the end of the continuum. Austin hotspots, and then sales projections or seller projections. You know, what do sellers imagine is going to happen? What is their future if they don't sell? What does that even look like? So first topic is buyer competition and inventory. I'm kind of scared to ask, but what are you seeing out there today for investors? What's the highs? What are the lows? What's the world look like?
Man, yeah. So it's funny. I mean, inventory is incredibly low. I mean, it's funny because, I mean, a couple of the months recently, I mean, there were record numbers of houses sold in Austin. And a lot of us who are in the market, like you guys and us, we're sitting there like, what? How is that possible? There's nothing available. But the fact of the matter is there's nothing available relative to the amount of people who want to buy, right? So it's like saying there's 100 houses available, 10,000 houses available is kind of irrelevant if there are 10,000 houses available, but only 5,000 people looking. So what we're dealing with now is, you know, there are about 1,000 houses available and 9,000 people looking, right?
I'm trying to do the math on that in my head. So we've got a metro area of 2 million people, 1,000 houses available. 2 to 3 people per house. I mean, it's basically nothing.
Right. Exactly. So inventory is incredibly low, but I mean, honestly, my team and I, this might sound cheesy or cliche, but we really try to have a growth mindset about these things and not a scarcity mindset. So we're just like, what would have to be true for us to be able to knock this out of the park for our clients and get them into the security of home ownership or, home ownership, investing or with their primary residence. And so kind of what we found is what would have to be true is the clients, the investors would have to know what to expect, right? So it's funny, in our business, literally, we don't even call it buying a house anymore. We don't call it that. We call it winning a house, right? Seriously, we don't even use the word anymore, buy. So we say you win a house. And so really, I think in order to win a house in this market, you have to know 2 things. All right. And this is my personal experience with me and my team.
It's only what you do every day, all day.
It's only what I do every day, all day. And so kind of our sweet spot is kind of that $350,000 to $650,000 range. And then we sell a lot of houses. And so in our experience, on average, the first expectation is we're seeing homes go about $70,000 to $80,000 over the asking price. Sometimes more, sometimes less, right? So it's just, you have to know that. The second expectation is if you're getting a mortgage, which most people are, we're seeing appraisals come in about $20,000 to $30,000 below the contract price. And in this market, the buyer, I don't care if you're an investor or looking for your own home, you're going to be expected to bridge that gap in terms of extra down payment out of your own pocket. So we tell our clients, it is possible to win a home in this market, but you have to know what to expect and you have to be willing to do what it takes to play the game.
I think it's super interesting and smart. I could go on with some adjectives that you are utilizing different verbiage to describe the reality out there. So frequently we fail to make those changes in minutia and pay attention to the details. And the expectation then for clients that are not yours is that they're going to go out there and make an offer and someone's going to negotiate with them. And it's really in this moment in time, and everything changes and ebbs and flows in life, but in this moment, that's not the truth, and that verbiage is not accurate. I know that's such a small detail to really take and run with, but that is the difference between clients who go to another agent and are frustrated, don't win, that are, even if they're bidding 50 up, or even if they do get the house, they feel beat down, versus going in with the proper mindset of this is a competition. And yes, of course, we want a beautiful house, but we're here to win, not just negotiate, because no one's negotiating right now. I mean, I do think people, I'm very proud to say, I think people in Texas still have a little bit of integrity, that if you go to most Texas property owners and say, look, we're willing to give you what the market value is, but the AC that's in there is completely destroyed and you didn't mention that, please repair that. Most people are reasonable and say, okay, I'll come to the table and be reasonable with you. That's fair. I'll own my part of this. And I don't feel like it's a complete abuse of the buyer, but it's definitely a competition. That's really impactful that you said that. So let's take a peek at our first poll today. And let me see if I can pop this up correctly. Did you buy real estate in Austin in 20 or 21? Yes, no, or yeah, I'm still trying. So let us know your thoughts. We'll kind of regroup on that, but it's interesting to know your audience if you're going to talk to folks. So we've got a couple responses on that. We'll just keep it open. But yeah, trying to right now. Guys, if you're out there, I'm going to give it to you. It's tough, but going in with that mindset of winning is going to be so powerful to you, instead of going in and you used to go through and say, oh, well, I love this neighborhood and I love that and I want this. And that's just, it's not today. Maybe tomorrow, but not today. The second topic we've got is the Austin hotspots. everybody calls us and calls you, even if they don't have a property to manage. They call us and they say, what do you buy? Give me advice. Or they go to these, this is one of my pet peeves. They go to this seminar and they pay someone to help them get rich, right? Now, mind you, that guy's getting rich off of people going to his seminar. But they show up and that guy says, or gal, you have to get your team together first, right? So they go out and they're calling 38 people asking the same question of, where do I invest? Where do I buy in Austin? Now, I think for a lot of people that are owner occupants, they're probably into these places that are next to their employment, good schools, things like that, because they have different objectives. But for investors, it should be return on equity, return on investment, however you want to look at that. What are you saying about hotspots? What do you say when people call you and ask you that question?
Yeah, and I promise I'm going to answer your question. And before I do, I remember, rewind 6 years ago. I don't know if you remember this, but I was a newish realtor. I'd been in the game for a couple, 2 or 3 years. And I was like, I got to get in on this investing thing. Man, I'm seeing these clients make all this money and build all this equity. I got to do this. And I called you and you talked to me on the phone 6 years ago now. And I remember asking you these same things. And so you gave me incredibly wise advice. And so it's definitely informed like these things that I talk to people about every day. I've never really been able to tell you that. So thank you.
Very kind of you.
Yeah. And so, I mean, again, the awesome thing about real estate investing is there are lots of ways to skin a cat, right? I mean, there are literally hundreds of different ways that you can attack this thing. Personally, I choose like very safe, conservative investments. And so for me, I'm not trying to be the sexy investor guy. I'm trying to be the boring investor guy, right? So that's going to inform the advice that I give the audience here. So for me, being in the market, I genuinely mean this. Anywhere within touching distance of Austin, you're good. You are safe, right? But since I want to actually answer the question that you asked, I would say Liberty Hill right now is just blowing up, right? Gerald, I mean, absolutely exploding. Taylor, these markets that are like just outside of like Austin proper, I definitely think there is just like a ton of potential for growth. We're already seeing a ton of growth there. And I mean, these are areas that, in the next 10 years, they're going to be Austin. It's going to be almost central Austin at that point. And so I think there's a lot of, I could go on, but I think there's a lot of room for growth there.
The unique things you mentioned about those areas, minus Taylor, but Taylor's very close to that, is Liberty Hill. You've got a toll road leading to it. Gerald, major U.S. freeway running through it. And then Taylor is not far from our new toll road on the east side of town. And it's really the infrastructure. I remember years ago in Houston when they put in the Harris County Tollway or whatever, Beltway that really was on the outside of town, the fourth Beltway. I don't know how many, in Houston they pour a road over a weekend. But in Austin, it takes us 100 years. But nevertheless, they put that Beltway in. It was tolls the whole way. It was, like 5 lanes on opening day.
Yeah.
And there was nothing out there. But because of infrastructure, if you go back today, 10 years in, it was full of large industrial complexes. 5 more years, subdivisions on either side of those large industrial complexes. And it's full. And we've got a tollway to the east side of Austin. It's sitting, and it's going to fill in. There is nowhere west to go.
Right.
You're not going to buy a house on the lake. There's no infrastructure to get close to that. There can't be a toll through green belts and lakes and hills. It's not happening. Right. And you've got Austin, Dallas, San Antonio. I guess for the camera, I'll do this side, Houston. And it's going east.
Right.
That's it. So I agree with you. Those cities that are off of that toll road, it's just a matter of time before it fills in, right? It's not even a question anymore. And I really love what you're saying about conservative bets. We hear about people that buy a contract on a condo in Miami and it hasn't even broken ground, and then they sell it before it's even built, and they make all this money. And what you don't hear about is the people who are super embarrassed with those bets because they go wrong. You only hear about the ones that really make it. But the truth is, a 3-bedroom, 2-bath, single story, cookie cutter home in an entry level neighborhood for most Americans is their dream starter house.
Yeah.
And it will never go away.
Yep.
So,
took the words right out of my mouth.
Man, make a smart bet. I mean, people come to us and try to get fancy, and we're like, don't be fancy. Just be smart. Most people in America want a nice home in a nice neighborhood they can be proud of. They can put their kids in school. They don't even mind driving a little bit to work because they get it. You know, location costs money, and they'll stay there in that home. They'll renew their lease, and they'll be proud of that home and take care of it instead of flying by night or constant turnover. These we did a market update on our blog about the condos versus single family, and it takes twice as long to rent a condo right now. But condos also have higher turnover because people don't put their kids in school and stay. They go through those. So anyway, I love it, man. Everything you're preaching, I feel like we should have put this on notes to say the same thing before we get started. It's just facts. And don't rethink the wheel. Don't get creative. Do what works. Show up, do it right, do it on time, and just keep renting money doing what works.
I mean, the path is proven. Just run the play.
That's it. And we've had this so many years now that I can almost, we have formulas, and I'm happy to plug those in for people, but we can predict what those investments are going to do. We're trying to get really fancy and computerize the whole dashboard and all that, and it's a little bit more difficult than just snapping our fingers. That's kind of an 18-month project for us, but we have the numbers we can run on a spreadsheet right now and tell you what that looks like. So Barrett can do this as well. You know, ask him to do it. So our next thing is another poll for you. I think if I'm on topic, let's see, if you could buy a house in Austin, where would you buy it? Now this one's got a lot of answers and questions. So let's see if I can make this work. And visible. That should be up for you. And don't forget, again, we'll hit any questions you have at the end of this. So we'll come back around to those. Number 3. So what do you think is going to happen through the rest of 2021? What are you telling your investors? Like, people are calling you, Barrett, I'm ready to buy. Give me 3 single families. What are you telling them? Where are you sending them?
Yeah, I mean, I'm sending them to these places. I mean, like Round Rock, Pflugerville, Hutto, Georgetown, Leander, Cedar Park, Liberty Hill. That's kind of my sweet spot. And I mean, what I've been telling people to expect this year, I mean, first off, I don't know, right? None of us have a crystal ball. We don't know. But now that I got that out of the way, I will actually answer the question. I think the market is going to continue with this level of intensity until interest rates go back up, right? But I'll have clients who say, you know what, we're gonna wait to buy until the market drops, or we're gonna wait to buy until prices go down. And I'm like, oh, well, then you're never doing it. So that's okay. And so I think when interest rates go up, and they will, obviously, I think they'll probably go up in the next 9 or 10 months significantly. And by significantly, I mean 1% or more, which is a big swing, right? But I think when the mortgage interest rate goes up, I've been telling people, I think our market is going to go from 500 miles an hour to 350 miles an hour, right? Which is still freaking fast. But I think it's just going to take a little bit of the edge off. I think instead of all these cookie cutter houses having 25 offers, they'll each have 15 offers, which is still an incredibly competitive seller's market, but it's not as frantic as it has been. But honestly, I mean, I think our market is going to continue similar to this for probably the next 15 or so years.
So I'm taking two things away from there. The first is tomorrow's buyer. I'm going to wait and I'm going to buy tomorrow. Do we agree that inflation is the goal of the Fed? Not through the roof inflation, but moderate inflation. I mean, that's what they're saying, right? Nobody wants deflation. That's bad news. And stagnant's not going to help us pay off debt. So we need moderate inflation. Waiting till tomorrow to buy, and mind you, I'm not in the sales field, but I have been doing this 15 years. I own investment properties. I've made mistakes not buying real estate.
Right.
4402, 04, I missed out on a house in Austin that I'm still angry about because I didn't buy it.
Sure.
Inflation's going to take root, and those mortgages are at fixed rates. So if you buy today, you're paying it back in future dollars that are easier to pay back. Not only does rent go up, but dollars become worth less, and therefore it becomes easier. So at some point, you've got to get in. You can sit on the sidelines. I guess if you're 25, you can afford to sit on the sidelines a couple of years, and you're not changing your trajectory that much.
Right.
When you're in your 30s, like how long are you going to sit on the sidelines? It's and it is a brutal game. You got to go to win it, but you got to be in the game, or you may never get in. I forget the second thing I was going to ask you now, but so what do you think? You don't think the economy in Austin is just guaranteed for 10 years, is what I'm hearing, but you like it for the next year or two?
No, I think it very well could be like this for the next 10 to 15 years. I mean, as long as Austin continues to have a robust jobs market, I think it's going to be like this. I mean, all I hear is more and more and more companies moving here and planning to move here. And I've got a ton of friends in the commercial space. And every time I talk to them, they're just like, Barrett, you don't even understand. You don't even know what's coming,
Which is really interesting because during COVID, everybody was saying commercial is going to crash. Commercial is going to crash. Everybody's going to pull their offices. We know we're all going to work from home, from Mars or wherever we're going to work from. And you're going to be able to get commercial properties free. And what you're saying is that never happened.
Well, I mean, it's one thing, like a lot of my friends in the industry and that side of the industry they're not necessarily renting or selling just high-rise office buildings, but there are lots of plans in the works and lots of projects in the works for like manufacturing space, warehouses, things like that.
Stuff that creates jobs.
Exactly. Yeah.
Yeah, it's pretty. I think you're right on. We have a close friend that does commercial upstairs, Woodlands Properties. They're a family business. They're not a major corporation. And they've been doing it for generations, and really great integrity, just good humans. And they're seeing the same thing. If they can acquire land they know the price, down to a penny per acre, they've got buyers lined up waiting on it. And those are industries that are bringing jobs to Austin. They're not people putting in, I'll leave that out because I'm going to upset somebody if I any business I say is going to upset somebody, but those are job creators is what they are.
Yeah.
So, I've seen Austin, I grew up in this area, came back, and I've been doing this about 15 years. And I got to be honest with you, when you build a business, you start and you are the one that cleans the floors. Mm-hmm. You are the one that turns the lights off and on and everything else. And the first 5 years, I think I was, really getting started. I was watching this and just kind of like, this can't go on. And the next 10, I was like, oh, it's going. And in the last 5, I've been like, I'm seeing the change in momentum from a national perspective for Austin.
Yeah.
And then if you look at the census data and the projections, within a few years, we're supposed to have the same traffic count at the airport, which is on the tollway, back to infrastructure, as Bush Intercontinental in Houston. That's insane. So, if you haven't jumped into the market, it's just time. And if you don't get the first one, it's okay. Definitely go to the safer bets. And Barrett's your guy because he's telling you where to go. He's not saying buy the high rise. He's saying go safe and come back because you're gonna do well on this, and you're gonna buy another one, and we're gonna have lasting relationships. So our second poll, let's see if anybody took heed on that one. East Austin, Pflugerville, Round Rock, that's where folks are really wanting to buy. I can't disagree with you. Backside of Pflugerville and Round Rock, both on the toll. East Austin, I was not a believer in East Austin. I'm going to admit it. I wasn't a huge fan. A lot of people are. They loved it. They've always loved it, and that's okay. There's different strokes, different folks. But I can't deny the numbers. I can't deny the geography. It has done extremely well, and I don't see that changing with the gentrification up there and the changes now and the reinvestment. Good night. If that thing on East Riverside that looks like the Domain ever starts and really takes off, I don't even know. We're not going to be able to even be mobile in this town. We're going to be all riding scooters because parking way or something like that.
There you go.
Well, let's if we got a couple minutes here, we've got about 4 left. Let's take a peek at these questions. And Barrett, I may give you a stab at these just to make sure that they get answered, and we'll go from there. So the first one is currently have a home in Austin fully paid off. How can I pull money out of this property and continue to rent? And I'm gonna let you take that.
Yeah, sure. I mean, I'm not a mortgage lender, right? So I couldn't personally help you with this, but I mean, my initial gut response is do a cash out refinance and just keep on renting like it never happened. So that's how you can pull some equity out. I'm actually thinking about doing that. I'm actually thinking about doing that with one of mine right now, in order to finance some construction, some renovations on my personal home.
When we run numbers on these two, just so everybody feels comfortable with this, we had an investor who we love, and they are going to liquidate their assets in the next month. And they paid the asset off fully. And the rate of return that we were able to give to them was only like 4%. And they were like, well, we need to sell this to get another investment that produces higher. And we went back and forth, and you never want to alienate people or, push too hard. But the truth is, it was time to pull half the money out to leverage the asset. Because when it's leveraged, I can get you almost double that rate of return on your money because we're using the bank's money. Right. It's going up in value on all the money, but you've only got half as much invested. We're now paying down the mortgage again and going through that. So then they've got another pool of money that they can pop into something else, and they end up at the end of the rainbow with twice as many assets. And I think a lot of people lose sight of that. They go, well, it's no longer producing. Well, it's no longer producing because there's no leverage. You really don't want these paid off until you or your grandkids or whatever it is hit retirement or hit your target investing goals.
Yep.
And so I have found that 50% leverage, actually, it'll still cash flow even on a 15-year note, which means I'm paying taxes on that money. So really, I know there's no loan that does that per se, but 30, 35% leverage, 40, depending on the investment, gets you somewhere where you're slightly negative cash flow, which is good because then you're not giving it away to the government in the form of taxes, and it's maximizing your leverage on that. What are your thoughts on that, Barrett?
I love it. I mean, honestly, I go to people like you to give me advice on that. But I mean, in terms of, can you still hear me, by the way?
Yes, we're good.
Okay. My headphones made a weird noise. I go to people like you, like my financial planner, my CPA for advice on these things. I mean, my specialty is, getting the best deal possible on the buy, right? And the sell. But I mean, clients ask me all the time for advice like this. And again, I'm not a financial planner, but we'll have investors or just homeowners who say things like, I'm just going to pay off my mortgage early, or I'm just going to go ahead and pay it off. And I mean, I talked to my financial planner about this, and it really was kind of a light bulb moment for me. And he was just like, Barrett, think about it. Like, what is your interest rate on your mortgage? And I think ours on one of our properties, like 3.5%. And right. He was just like, no, like if you pay off that mortgage, you're getting a guaranteed return of 3.5%. I can make you more than that in the market, or right. You can make more than that buying another rental property.
Precisely.
Right. And so like, why are you going to do that? Now, if you bought a car and you have an 8% interest rate, well, yes, pay it off because, that's a guaranteed 8% return, and you can't guarantee that in the market, in the housing market or the stock market. But yeah, especially when rates are this low, no, it just doesn't make sense to pay off your mortgage early.
Yeah, the other side of that investing coin I was just thinking about is when you've got a house that's fully paid off and you're insured like you should be, it's almost zero risk, right? I mean, our price is going to plummet? No. If it burns down, I've got insurance. It's almost a zero risk investment,
Right.
and you're making 3.5% on a zero risk. Show me where you do that with bonds. I dare you.
Right.
It doesn't exist. Show me where you do that with anything that's a secured investment that actually exists, not imaginary on a computer screen. So, all right, next question is, what does the housing market look like in Central East Austin near Decker Lake? Take it, Barrett.
Yeah, I mean, very, very competitive. I mean, we've been making some offers for some brand new communities out there, and it's funny. I mean, builders now are taking multiple offers, and that's not something that we've really ever seen. And I mean, it's funny. I thrive on helping our clients know what to expect, right? Like we were talking about before we went on air here, and they need to know what to expect. And so I can remember just a few months ago sitting down with our clients, especially our investor clients, saying, hey, listen, new construction is the way to go. You don't have to deal with these crazy multiple offers. It's first come, first serve. It's been like that for 85 years.
Agreed.
And then I'm sitting there on the phone with them 1 week later saying, hey, so remember when I told you new builds don't do multiple offers? Well, they do now. And they're like, what? And then I said, but it's great because even though you do multiple offers, you don't have to do this appraisal waiver. You don't necessarily have to bridge the gap, right? And they're like, okay, cool. Well, literally 1 week later, fast forward, I'm like, so remember when I told you didn't have to bridge the appraisal gap with new builds? You do now. So now a lot of builders, I mean, why would they not take multiple offers? They're a seller, just like any other seller. Why not get the most money, right? Yeah. So I would say that area out by Decker Lake, I think it's a very safe, conservative investment, like we were talking about. But it is going to be incredibly competitive. So I would say, don't get too emotionally invested in your first at bat. When you're making offers here, just be ready and prepared to get your teeth kicked in a few times. And but I say go for it.
And if I may, if you're a owner occupant, schools, backyard, those things matter. If you're an investor, what's the quality? What's the rate of return? Like it's a whole different set of questions. So, but I kind of do like that area out there. It's nice.
Yeah, it's funny. Our investors ask, especially first-time investors will ask us all the time, well, what are the schools like in that area? And I always kind of joke. I ask them, I say, well, are you going to send your kids there? And they're like, well, no. I'm like, well, who cares? Like, whatever the quality of the school is going to be factored into the sales price and factored into the lease amount.
Yeah, it matters.
Of course.
It is already factored into what the numbers are. So it's not like you're going to pay apples and apples and then get lucky with one school here and bad. It's already part of the equation. You're correct. All right. Last question for us. I've had some challenges with appraisers availability. Is this something you have also seen? And do you have any tips to expedite the timing?
No. Yes, I've seen it. No, I have no tips. No, I mean, one tip is expect appraisals to take forever because they're just absolutely slammed right now with all the refis and the purchases. You can pay an expediting fee. And I don't know if this person is like, if they're trying to get an appraisal through their lender, but oftentimes you can pay an expediting fee. And that might be $100, $200, lately we've seen about $500. So it'll cost about $500 for an appraisal and another $500 for an expediting fee. And you know why they're doing that? Because they can.
Yeah, I'm not even a big fan of I'm a fan of appraisers. I'm not a big fan of the system.
Yeah.
Because it's historical looking, and I respect that. Yes. There needs to be an independent third-party limit so we don't have the fraud that took place in 2008. However, if you've got a seller wanting $500,000 and a buyer willing to pay $600 cash, it's worth $600 cash. I don't care what happened last month. So it's not the appraiser's fault. It's the system that they work through, but it makes it really tough on owner occupants, in my opinion, because they can't get the mortgages they need without coming to the table with an extra $100,000. And most families who are getting started that are teachers and firefighters and police officers don't have an extra $100,000 to compete on that because the appraisal is different. So it's something there's got to be fixed so that our families in America can, keep moving forward instead of just people moving in with big checks and kind of bullying them out. But I'm not in Congress, and so we'll let somebody else solve that one for us.
Yeah, all we can do is set expectations right now.
Yeah, I agree. Well, Barrett, we're about time to close it out today. Is there anything that you want to add that you just didn't get a chance to share?
Thanks for having me on. This has been amazing. I love talking about this stuff. I would just say a couple quick things. 2 years ago, even like a year and a half ago, something that we as a team used to tell all of our home buyer clients, we'd say, you know what, we got your back and we're not going to let you make a stupid decision, right? We would always say, we're not trying to compete with crazy, right? So we're going to take a few at bats, and if we don't get it, we don't get it. Well, fast forward a year and a half, now we're saying we are absolutely competing with crazy and we have to do it. And especially as an investor, really investors are buy low, sell high people, right? That's what we do. And so I would say if you win a house in this market, I can promise you, unless you're getting a sweetheart deal from somebody, which really doesn't exist. If you win a home in this market, no question about it, it's going to feel stupid, right? It's going to feel like you're just getting fleeced and you just have to get over it. And which brings me to my next point is I know I'm really biased. And even if it's not me, you have to align yourself with a good real estate team that you trust, that will give you advice as if you are their biological family, right? And otherwise you're flying blind. And the last thing I would say is we tell our clients, try not to have a lot of home buyers, investors included, maybe even more included, is they tend to have what we call the 5 feet view. What's right in front of me? What is this like right now? What does this mean for me right now? And we as realtors, as advisors, try to have that 5-mile view. What does this mean for you in 5 years? What does this mean for your kids? What does this mean for your grandchildren if we can get you into the game right now? So try not to have the 5-foot view and try to have that 50, 500-mile view.
I love that. One of the things that we started doing a couple years back, and we're diligent about it, but we're trying to systematize it through software, should I say, is kind of a Ritz-Carlton approach of knowing our clients so well that we know what their investing targets are, what that timeline is, and what's important to them, so that when something goes wrong in 2 years and the AC goes out, or they have a hailstorm, or I don't know, a tenant acts up, we get to go back to them and say, okay, this is a 15-year game.
Yeah.
The kids are 4. We're looking at their college, and we're only on, year 2. So it's going to average out, and other people don't have an issue until year 15. But
right.
You're saying now, and let's keep a perspective on everything and where we're going. I really am I'm really pleased to be able to work with you. This is work for you and I, but it becomes pleasurable and enjoyable, and it feels good in your heart when you work with other colleagues that have such integrity and emotional availability and calm and just do the right thing. That's when it starts to get rewarding, right? Because you can go out and sell stuff and then go home and just feel exhausted, but it's not really emotionally rewarding unless you have people around you that really do the right thing and that you can be honest with, because they're successful enough to say no. Mm-hmm. I would challenge anybody out there, whether you're dealing with lenders, property managers, your agent, whatever it may be, if all they do is tell you yes and they never push back, that's a huge red flag. You should be going to them for advice. And on the other side of the coin, We have some people that will want to interview us along with 10 other people, and they have 30 prescribed questions. That's not really a good fit.
Yeah.
Because I don't want to know what you've copied off the internet to run me through hoops. I want to know about you. So let's get to know each other and stop playing games and stop acting like we're competing or somebody's out to get each other. We're so fortunate in Austin. I'll do a shout out to the Platinum Top 50 too, to have agents who are productive, who are members of our community. All the RA agents, their heart's in the right place, and they're just going to do the right thing by you. And I don't think that exists in other marketplaces. I mean, I'm not going to call out cities to keep from offending anybody, but you don't hear of that level of integrity everywhere. We have so many folks that come from California that believe that as agents, we're going to play both sides against them.
Yeah.
It's not the way the real estate law is written in the state of Texas.
Yeah.
The law is written such that I don't care if you get paid, this is going to be how you're going to do it, and you're going to have integrity, or we'll see you. And you don't want to see them. And so it's just a different ballpark, and it feels really good to be in that bowl of great people that can say no in order to do the right thing at the end of the day. It's good. So Barrett, where can folks find you? You're an outstanding guy, you're an outstanding agent, you're killing it at RA. They love you. Where can people find you? So that they can just have a conversation with you. I mean, what a concept, right? Talk to each other.
Yeah. So I'd love to chat with anybody about any of this. So probably the best way to contact me is via email. And it's just my name straight through, Barrett Raven at realtyaustin.com. That's Barrett, Raven like the bird, at realtyaustin.com.
Okay. Is there a phone number for your team?
Yes. So 512-970-2648.
Great.
That's my team phone number. And then website, also really easy to remember, barrettraven.com.
Even better. Okay, that's all up there. I'm going to put our website here, the short version, so people can find us as well. If you've got any questions, guys, if you're in a pickle, buying, selling, give Barrett a call. Just call him. I mean, I know it sounds weird. Everybody wants to chat with somebody they've never met. It's not even in the country, but just call him. Talk to him like a normal guy. He's a good guy. And if you have anything that you want to run by us about management investing, that's what we're here to do. We've got teams of property managers. We've got salespeople. We have onboarding specialists. We've got all this stuff. And in all fairness, I've been doing this so long, and I went out and traveled for years to meet people that I admired on my side of the industry and the management side. And I've got friends in other cities that I can vouch for that are good people that we collaborate with and we mastermind with monthly and things like that. So even if it's in another city, and maybe I don't know somebody, but if I do, I can at least tell you who's solid and who isn't. We're here to help you guys reach your goals. Let us help you reach those goals. We're here to do it. That's what we make a living doing. So Barrett, it was just wonderful having you today. I appreciate you. I appreciate your team. I can't wait to see you in person. We've got some events coming up. We've got an events page on our property management website. But whether it's PT50 or whether it's one of our events or tailgating or anything else at UT, we're going to do it this year. And I look forward to buying you that first beer.
Well, thanks for having me, Matt. It's been a blast. You guys are the best in the biz, and it's been an honor.
Awesome. All right. See you guys soon. Reach out if we can do anything for you. Love you guys. Take care. We'll see you in Austin.